Hey, it's Michael Saul, but everybody calls me Tiny. This video is buy up or stay away. This is stock market analysis for the week of August 26, 2019. If you would like to receive intra-week updates, go to www.attackthemarkets.com, put in your first name, your best email address, follow the directions, and you will be on the intra-week distribution list. Facebook group is at facebook.com/groups/attackthemarkets. If you like what you're hearing on this video, and come on, you know you do, give me a thumbs up, leave a comment so I move up the ranks in YouTube. And to never miss a video when one is uploaded, click the subscribe button and smash the bell, and you will be notified when a new video drops on the channel. You like that? You like that cool and hip word, drops on the channel? All right, so let's take a look at the market. So another week of a lot of tariff chatter, and there's even more this weekend where the White House was saying, I just read it this morning, the White House said that Trump is regretting the tariffs, and then it came out later that the president said, yeah, he regrets not making them higher, right? So it's not that he regrets initiating them, he regrets not making them higher. So looks like this week is going to start out volatile as well. Now, if you've watched my videos over the last few weeks, except for the week that I decided to take off, you know I've been talking about us going into more of a range-bound, pullback-ish kind of market. I'm not calling for a big bear market or a bear, that the top is in and we're just going to get wiped out here. But I have been saying that I think we can rest here. And the reason for that is that we've just, we went on a tear from the end of 2018. We did take a nice pullback in May here, right? This little two-step here. But then we went right back up to the highs here. And I just think the market is tired. And I think that while the market does climb a wall of worry, I think that this level of worry is another level, right? The president is fighting with China. The president is fighting with his Fed chairman, right, with Powell. So, there's a lot of things going on here. Now, again, I don't want to be one of these suckers that walks around going, well, this time it's different, because it really never is, right? It's usually always the same. And in the end, I do believe that this market will resolve to further upside. But right now, I do not see this as a buying opportunity. I just don't. We're between the 50 and the 200-day moving average, as you see here on the S&P 500. That means the 50 is resistance, and we can see it's been that way for a couple of weeks. The 200 is support. We haven't tested it yet, but if we continue low, I think we're going to wind up there pretty quickly. And then, of course, we have this early June low down here, which would be next on the S&P 500. So, right now, I think that staying away is probably the better choice for right now. Now, when I mean staying away, I don't mean just go away and just leave all your holdings and leave them alone. That's not what I mean. I mean staying away from trying to predict what is going to be the short-term trend here. For now, the short-term trend, I think it's showing it, is going to be sideways. And you see this wide, sloppy range. What will usually happen after this is that it will calm down and it will start to form a more narrow range. Then, once that narrow range has formed, from there we can look for which way it releases, either up or down, right? Maybe we did hit the highs and maybe we are going into a bear market, right? I don't think so, but we see which way it releases from there, and then we look to get on board. So what I mean stay away, in trying to play a trend here. Now, of course, some will say, well, you could still play a trend if we're moving sideways. Yes, you can. You can skate the edges, right? You can try to buy when we're at the low end and sell when we're up at the top, or you can do non-directional option strategies like condors and butterflies and all these types of spreads. That's up to you, all right? That's way above the level that this channel talks about, okay? But that's something that you could look to do as well. Now, again, if you are sitting there and you are worried about what the president is going to tweet next, then you need things to calm down before you try to, dip your toe back in. In my opinion, I think it's going to be resolved sooner than later, because I think a lot of people are thinking this is going to go on forever. And as soon as people start thinking that's when it'll get resolved sooner or later. I don't know if it's going to be this coming week. I don't know if it's going to be several weeks. But for right now, I would not be surprised to see us continue to form out this range. And like I said, for this wildness, maybe we have a little more wildness to come. Maybe we'll have a big expansion candle down or a big expansion candle up, whatever it is. But we have to wait until this volatility subsides. We wind down to a point of equilibrium, and then we look to release from there. All right, let me go through the rest of the majors and then look at some other things. But I'm not going to do go through everything like I usually do, because it's kind of not really a waste, but it's I've pretty much made my message clear here. So the Dow right on the 200-day moving average, again testing the low end of the range. Here's the Russell at its low end of the recent range. I mean, if this loses it, you have some retracements that can bring us all the way down here to sub 140, so we want to pay attention there. Here's the mid caps. All right, again, watch these. What is this? Is June or May? It's June, right? No, it's end of May. Watch the end of May low, and then you got like the 315-ish area. This continues, and then here's the Nasdaq, which acting the best, I guess, out of, but still basically the same pattern. You got to watch that 200-day moving average. You got to watch the 200-day on the SPY, on the Nasdaq, and the Dow, of course, is there now. So what about bonds? So bonds look like they're ready to resume their upward move. All right, and if they do and they continue to push yields down, there'll be more talk about recession. But man, what a play. This was a perfect setup down here with and you see what I'm talking about? It's not really as wild as it was as it's looking in the S&P, but you see how the range was a little wide and then it tightened up and then it released. Right, so that's the kind of move, or like down here, it was wild, it tightened up, and then it it released. Right, so that's what I'm looking at with the S&P 500. But for now, it looks like bonds could try this 150 level. That's the TLT I'm looking at. Here's the USO. This is how we look at oil. I think oil's ready to drop again. I think that if it takes out the August lows, I think we're headed to the December 2018 lows. That would be good for gas. I saw it at $2.41 yesterday. Not bad. How about gold? Yeah, gold looks like it's running hot again. Kudos to Mike Swanson, called this months ago. Months ago he called that gold was ready to move. And you can see here, on the move here. Why? Because it's scary out there, right? The market's scary. So what do? They fly to safety. They fly to gold. All right, here's miners, not quite as strong as the physical metal, but still acting okay. I mean, there is a little divergence here, but we're not looking for little few hour or day moves, right? We're looking at a bigger term, and there's nothing really diverging here. So again, here's the update. Volatility has increased thanks to the president sparring with Jerome Powell as well as China. I think these issues will resolve sooner rather than later. I'm not predicting that it's going to happen, but I do, it's going to happen tomorrow or anything like that. But I do feel that, like I said a few weeks ago, I feel we are in store for some range-bound movement, or coming back to the range, or even pulling back a little bit more. I don't think we started a new bear market. We want to watch the 200-day on the Nasdaq, watch the 200-day on the S&P 500. The Dow's already at the 200-day moving average. I don't know if this is going to resolve this week or a few weeks, but right now, unless you're playing range strategies like condors and butterflies and selling credit spreads and all this stuff, or skating the edges, picking it up when it's down at the lows, selling it when it's up at the highs of the range. I just don't feel that there's anything solid here to sink our teeth into. So any questions, you can always write me at tiny@attackthemarkets.com, and I will get back to you. Otherwise, don't forget to give me a thumbs up and leave a comment so I move up the ranks. Click subscribe, smash the bell so you never miss a video. Join the Facebook group, facebook.com/group/attackthemarkets. And most importantly, get intra-week updates at attackthemarkets.com. Have a great trading week, and I will talk to you in next week's video on the intra-week updates.